Hello, good morning, everybody, and welcome to a new episode of Merrill's Monday Morning Market Madness. Coming at you with a very different episode today than what you've probably seen in previous years because the market is finally slowing down. And so I'm going to jump into the numbers with you on that and talk to you about what I expect to see moving forward. So let's dive in. Right now, active on the market in the Phoenix area MLS. We have 6,605 active listings, 11,057 homes that are currently pending or under contract, 8,885 homes that have sold in the past 30 days. If you take the number of active listings divided by the number of homes that have sold in the past 30 days, that gives us a month supply of inventory number, which is 0.74. And a balanced market would be expected to have closer to like a 4 or 5 month supply of inventory. A buyer's market would be expected to have 6 months or more supply of inventory. So 0.74 is still extremely low, and most people would expect that. And by the way, if anyone has any questions, please feel free to post your questions and I'll do my best to answer them while we're live on the video. If I can't answer them live, I will go back in later and answer them in the comments. So 0.74 is still an extreme seller's market from the month supply of inventory standpoint. But the challenge is that we're kind of moving in the wrong direction. The month supply of inventory was as low as 0.4 just 2 months ago, right? So it is increasing, and it's increasing fast. And also it's a little bit of a lagging indicator because the number of homes that have closed in the past 30 days is how we measure that, right? Compared to how many active listings there are. Well, it's looking more and more like we'll see even fewer homes close over the next 30 days. So demand is kind of falling. The number of homes selling is falling. So, and inventory is increasing. So we're going to continue to see that month supply of inventory number increase pretty rapidly, in my opinion. The reason why this all matters is because right now, May and June, historically, May and June are the 2 months of the year where we see the most homes close in the Phoenix market. And so we're supposed to be at the peak of our frenzy. We're supposed to be at the peak of like the busiest selling season that we have all year is in May and June. And it's going the wrong way. So despite the fact that we're in our seasonal peak, inventory is still increasing. That means once we get out of the seasonal peak, it'll probably increase even more. So give you an idea. Again, I mentioned there's 6,605 active listings as of this morning. Just 2 weeks ago today, so 2 weeks ago on Monday, there were 5,566 active listings. That is an increase in just 2 weeks of 1,039 active listings. So another way of looking at that is 1,000 more homes have been listed in the past 2 weeks than what have sold. Obviously, there are some houses that might be coming back on the market, and that stuff as well. So 19% increase in active inventory in just 2 weeks. So the other number here is the pending. So with only 11,057 pending listings, that's the fewest number of pending listings we have seen since January 24th. So the total number of pending listings is really low, which is an indication that we're going to see a huge drop in the number of homes that are selling over a 30-day period. And you probably know, maybe you do, maybe don't know this already, but the Federal Reserve is meeting again this week. I believe they're supposed to be meeting on Wednesday to announce whether or not whether they're going to raise rates again. Now, of course, mortgage rates are not the same as the federal funds rate. Like however, they have a trickle down effect. If the Fed raises rates, it is almost certainly going to affect an increase in mortgage rates as well. It's all kind of tied together. So if the Federal Reserve comes out and raises rates again, that could continue to negatively impact demand even farther than where we are at right now. So And most people speculate that the Federal Reserve will be raising rates. And the reason why is because inflation is still completely rampant and out of control. So they have to do something to help with the inflation issue. So they're probably going to raise rates, but it's a tough situation for them. Double-edged sword: raise rates to try to fix inflation. Don't raise, but when you do, that hurts the economy as a whole and hurts the housing market and hurts a lot of other factors. So I don't. I'm glad I'm not in that position where I've got to make those very difficult decisions. So here's what I expect to look, looking ahead, right? I mean, no one's got a crystal ball. No one knows for sure, but based on, all the data that I collect and look at on a regular basis, I think I can make a fairly accurate, like a few things that I expect to see happen in the next couple of weeks. Number one, inventory will continue to rise as home sellers are going to, see the market slowing, and a lot of people are going to rush and try to get their home on the market to try to catch the tail end of this. So we'll continue to see a surge in active listings. I believe that the very high end part of our market will continue to do quite well. $2 million and up type properties, because those are sold mostly to cash buyers. So mortgage rates don't affect them as dramatically, although the stock market does affect them very dramatically because a lot of people are raising money by selling off stocks and that kind of thing. So I'm not trying to say that they're going to be completely out of but they're not going to be hit as hard, at least initially, as other parts of the market because of the cash buyers. The low end will continue to do really well because people still have to live somewhere, right? And so if maybe you previously qualified for a $600,000 mortgage, now you're still going to buy, but you're only going to be able to get a $500,000 mortgage, just as an example. So that's going to put more pressure on the lower end. And then I think the mid-range will probably get hit the hardest, the fastest. But I want to be really, really clear. Like, inventory is still low enough. Again, we're still at 0.74 month supply of inventory. Inventory is still low enough that I don't expect home values to fall. Everyone always thinks, oh, this is a bubble because prices have risen so much. This is nothing like 2008 when home prices fell dramatically. The big difference here is that almost everyone has a 30-year fixed rate mortgage that they can actually afford. We're not dealing with, interest only and negative amortization and balloon payment type loans almost ever. Those are, even adjustable rate mortgages are quite rare. And so there's not going to be all these people who suddenly can't afford to keep their houses. And most people have more than 50% equity in their house. So the values would have to just completely plummet before they would be upside down in the house. So I think what I'm saying here is that I expect home values, average sales prices as a whole, are going to stabilize. And we've been seeing an increase this year alone. We've seen average prices increase by about 10%. Last year we saw average prices increase by 25%. What I'm saying is I think we've kind of hit the peak, and it's just going to kind of flatten out from here. It might go up a few more percent here and there just to maintain pace with inflation, but that is what I expect to see happen over the next the next couple of months. So we'll continue to keep an eye on it and keep you posted. But I do really believe that the extreme sellers market that we've been in over the last couple of years is winding down. We're still in a seller's market, though. Like, you're not gonna be able to go in and get $50,000 off of the list price on a house. We are still in a seller's market. But buyers are going to start to have more choices. Buyers are going to start to be able to negotiate slightly. Buyers are going to start to not have 80 offers on every single house and might even have a few options to choose from. And the market's really going to level out. So that is my prediction. I hope you found this helpful. Let me know if you have any questions. Have a great day.